Okay, hello everybody. Thanks for viewing this video. This is for the people that missed our update meeting last week at Joe Dean's. I'm just going to try to move along real quick here. The presentation took about 45 minutes before. I'm going to do my best to get it down to about 15. And hold on to your hats because I'm going to have to be moving. Here we go. All right, 2022 update. Indemnities for 2021 overall was not a very bad year. Some would argue. I know I've seen a lot of people that had their highest irrigated yields, say on corn, and their worst dryland yields on corn. Just kind of all over the board on the yields. Nationally, though, 62% loss ratios across the board. You can see where they were. They weren't really in the I states. They were up north or west, and then some spots here and there. A little context to that, 2021 had a 62% loss ratio. 2020 was 86. 2019 had a lot of prevent plant across the country. That was 105% national loss ratios. And then it kind of tapers off going back. 2012 had 157% loss ratio. So that's kind of the bar. Again, that's all crops across the board. Drought area. As you can see, out west, it's dry. Across the dark green is where the major crop areas are. And of the major corn production areas, it's only about 18% of that area is experiencing drought. Hemp 2022. Hemp is really not too relevant for our area. It's not legal to grow. There's a lot of, you could say there's a lot of it around, but as far as growth and insurance, we really don't have anything to offer producers around here yet. I think that's something that's going to be coming. Something that's interesting about it is that hemp production has really gone down from 2020 to 2021. It's down 51%. And the only states that it didn't drop in are the states that really haven't approved insurance policies or growth of hemp. But a part of it has to do with, I think there was just a flood of supply on the market. And then on top of that, it's a very risky product to grow because if your THC levels get over to the 0.3 or 3%, that crop has to be destroyed. And in high stress years where there's drought or whatnot, it's tough to keep that THC level low. Prevent plan for 2022. This is pretty relevant for our area, especially Southeast South Dakota or South Dakota in general. They eliminated the November 1st deadline. So instead of having to wait until after November 1st to hay, graze, chop for silage or whatever, you can now do that at any time after the late planting, final planting deadline. So that's a big deal. Instead of having to wait till after November 1st and hope that there's some crop out there left for your cattle to graze or for you to hay off, now you can do it at any time. You still cannot harvest it at any time for grain, though. So just keep that in mind. If it's prevent plant, you cannot take anything for grain. And corn is not a cover crop. There was a little wishy-washiness with that back in 2019 of whether if you just mixed it with some sorghum or something like that, could you plant it out there and chop it off later? Well, no, they're saying no. You cannot put corn out there in any form and call it a cover crop. That is a crop, and you will not get a cover crop payment. Excuse me, I'm battling a cold here. Also, reminder, if you were to have prevent plant on acres on this wet spot in the picture here 4 years in a row, that 5th year would no longer be eligible for prevent plant. You can have prevent plant 2 years, plant harvest insured a year, and then have it resets the clock and you're eligible for 4 years in a row again. If you were to have prevent plant on specific acres 4 years in a row, you would then you would lose your eligibility. You'd have to plant, insure, harvest those acres 2 years in a row, then they would become eligible again, and it reset the clock back in 4 years. If you have any questions about that, don't be shy, give me a holler. Pace, this is a new product for this year. I think it's going to have some good traction in areas that deal with prevent plant. I know right now it's dry, and that really doesn't seem like much of a worry, especially in Nebraska, where it's sandy anyway, but it's an endorsement on top of your existing policy. It is only for non-irrigated acres. You have to sign up by March 15th, and it is strictly for the second application of nitrogen. The whole deal is that they're pushing guys to be more, environmentally friendly by applying your nitrogen and not just front load your crop. So they're saying, hey, if you want to split apply it, tell us what percent you want to do. If you're going to put 60% ahead of time, 40% later, you're going to split it 50-50. Then we will insure you in case it's too wet for you to get that second or the final amount of nitrogen applied. So in this situation, this is just a straight 50-50. You're gonna put 50% out now. You're gonna put 50% on your corn crop later. You're gonna have about $43 an acre worth of coverage. If you look at this example here, this is on 100 acres. So whatever you see, you gotta divide that by 100. You're saying about 170 bushel yield. Again, this is dry land only. 100% share. Corn price 570, which we're about 586 right now. So these numbers will be a slightly, a minor bit low, but you're going to have about $44 an acre of coverage. And it's going to cost you $1.40, say 45 an acre in this situation here. So in Nebraska, I don't think it's going to have much traction. Things tend to dry off, and at some point you're going to be able to get out there and get your nitrogen out there. And on top of that, you're going to want to, because if things are wet, that means most likely your top end yields are still there. You're going to be a lot better off getting those top end yields than waiting around for a payment from this. I would assume those, especially $5-6 a bushel, that corn is going to be worth that additional yield boost you get from the nitrogen is going to be worth more than the $45 an acre you get for your crop insurance. South Dakota is different though. With prevent plant areas where you get wet and it doesn't dry out overnight, that water will pool and just sit there and sit there and sit there. For $1.40, $1.50 an acre, say, or up to $2 an acre, and it's some higher yielding ground, that may be worth it. It's not too terribly expensive, so something to consider. Again, if you had questions, we got to have an idea where it's going to be, what your nitrogen plan is, how much you're going to put out pre, how much you're going to put out post. We'll have to know that, but again, that's March 15th is the sales closing for that. Spring price is where we're at right now. These numbers are a little bit old. We're 586 on the corn, and we're 1426 on the beans as of today, and the markets were up today, so who knows what will be tomorrow. Something I want to show you quick. Let's go. Let me show you something. Get out of this. There we go. This is corn. Okay, this is where we've been tracking. First of February, again, we track the price, corn and beans, February 1st till the end of February, and then it locks in March. 578 is where we started. We're at 586. So we're going up. This right here is the volatility factor. The more volatile the markets are, this number, the higher this number gets. And this number is very relevant because there's basically, there's multiple things that dictate how much your crop insurance premium is. Part of it's your yield, part of it's your loss history, but then the price, spring price that they come up with, and then the volatility. If the markets are very volatile, that causes this number to go up, and that increases your crop insurance premium. You will feel it. In more quiet years, this number is usually down in the lower teens. So we want this number to be low. We want this number to be high. Beans, we want to start out at 1382, and now we're up to 1426. So it's going up hard. And volatility factor again, it's around 20. So corn, we are second in historical spring prices. So it looks pretty good that way. Beans, we've never been higher. We're at 1426. So this is the highest spring price we've ever had, which is nice because with your crop insurance, you can probably about guarantee yourself some profit. Your crop insurance coverage would probably outweigh your expenses alone. Wind and hail, another thing to keep in mind this year with these spring prices being so high. I think, guys, generally I say, either buy hail every year or never, because it's tough to guess it right. But on a year like this, if you're on track, if you've got a 200 bushel APH, you're insuring 75% of that crop, you've got 150 bushels insured. Well, if we get some rain, and all of a sudden it looks like you got 250 bushel crop out there, you got, again, 150 is covered by your multi-peril. You may have another 100 bushels out there without any coverage on it. So at $3 a bushel, that, it's $300. Yeah, it hurts, but it wouldn't kill you. But when that corn is worth $5.5, $6, all of a sudden you got $500 out there exposed. All the cream's exposed, and that hailstorm could come and take the top, third of your crop, and you wouldn't get any payment because you'd still have, again, 150 bushels an acre out there, which is what your crop insurance policy guarantees. So keep that in mind. You can bind hail coverage pretty quickly. Theoretically, you can do it 2 hours before the hail hits the ground, but please don't do that. If you got a nice crop out there, you're worried about hail, call, let's get it on, and not wait till last minute, because that puts a lot of pressure on me, and I don't want to let you down. So let me get back to the presentation here. Sorry. Cover crops. Last year was the first year they came out with this deal. They announced it on June 1st and said you've got till June 15th to get in and certify your cover crops at FSA office, and you get $5 credit applied to your applied to your crop insurance. This year they came out with it a little bit sooner. They came out with it on February 10th and said that you have until March 15th to certify any cover crops you have planted out there, and for each one of those acres, you will get $5 applied to your crop insurance premium. I do not know what cover crops have to do with the pandemic, but it's the Pandemic Cover Crop Program. LRP, Livestock Risk Protection. LRP has been around for quite a few years, and for probably well over 10 years, ever since, I've been in crop insurance for over 10 years, and this has been around ever since I started. But it's never been a very big push, because when insuring your hogs or feeder cattle, fat cattle, we always used to say you're probably just better off going out on the board and buying puts and calls, because it gives you a little bit more flexibility. But they've kind of overhauled the system now, and they increased the subsidies. So now it's really worth taking a look at. This is the fastest growing sector of crop insurance in our footprint. In our area, this is the thing that the guy should really be looking into if he hasn't in the past. So feel free to reach out if you think you'd be interested in this, because I really do believe this is a good deal. Farm Bill, this is going to be a bit of a snoozer section here. I'm just going to cover it real fast. Most of you have already signed up. This bill came out in 2018. ARC, PLC, or ARC individual. Basically, everybody around here, unless you have got a very, very strong chance of having prevent plant on a whole farm number, that'd be the only time you choose ARC County. Otherwise, if that doesn't sound like you, it's either ARC County or PLC. Last year I said PLC corn, ARC County beans, but this year I say ARC County across the board. Just a quick review. PLC is price only. Nothing to do with your yields, nothing to do with your local prices, nothing to do with your county yields. This is strictly price. And again, your price guarantees for corn, 370, 840 beans, we're way above that. And it doesn't look like we're going to be averaging below that anytime soon. In order for those to pay, the price, the national cash price for corn would have to average below 370 and below 840 on beans. And again, we're signing up for 2022. We start tracking those prices come September for the following 12 months to the end of August. Anything can happen, but I would say that PLC does not look very good. And then I threw a couple of pictures of my kids in on some of these because these slides can be a bit of a snoozer. ARC County, again, this is the one I'm recommending. Just a slightly better chance this pays out than PLC. The reason I like ARC County is because ARC County is a revenue-based product based off the same prices, but it also uses the county yields. Again, nothing to do with your own operation, but it at least figures in on some yields from the county. So if things, it's a revenue product, so we could have a high price, but if the yields are really, really low, we could still have a payment. And I don't want to go too deep into this because we got to get moving along. But if you got any questions about these, please give me a shout. And then ARC individual, or no, sorry, ARC County. Yes, this is just more information about, this is Yankton County data specifically. Real quick, I guess I'll just point it out. Irrigated, we in Knox County probably have to have around 147 for a irrigated yield for that to start paying out. Dryland corn 105, South Dakota irrigated corn 139, 112. So I mean that's kind of give you perspective is what we would have to be below to even have a chance. Again, there's other things that play into it, but to even have a chance of these paying out. Again, ARC individual, look at the bottom there, good for farm numbers with high probability of prevent plant on all acres, no acres planted. If you have 1 acre planted, it's not going to work out for you. 100% prevent plant, then go ARC. You see it like in river bottom ground up along the James River, where the whole field floods or the whole farm number floods. Supplemental coverage option. This is a policy you can buy if you have PLC. I just told everybody to buy ARC County, but if you want to buy this SCO, it stacks up on top of your multi-peril policy up to 86%. So whatever your multi-peril policy is, this is a county-based plan. This is basically ARC County that you can pay for. Again, it stacks on top of your multi-peril policy from whatever you have up to 86%. The reason why this could be appealing is that this is subsidized. The cost is say $5-6 an acre. You know, you're going to spend about $1 to get $6 in coverage. I hesitate with all these area-based plans that you're spending money on because I'd just as soon a guy spend money right here. At least then you can tell your banker, if I don't raise a crop, I'm going to get paid. You buy these other ones. Again, I've sold them before. They're not horrible. You know, they're subsidized. They will pay out over time, but it may not match up with the year you don't raise a crop specifically. So the next one is ECO. ECO is SCO's more expensive brother. Okay. Multi-peril level. Then you have SCO right here, which covers you from whatever your multi-peril is up to 86%. And then ECO, enhanced coverage option, covers you from 86% up to 90 or 95%. This costs, you know, by far the most per 100. You know, this is your multi-peril is going to cost you. You're going to spend $1 to get $10 or $20 of coverage. SCO, you're going to spend $1 to get $6 of coverage. ECO, you're going to spend $1 to get say $3 or $4 an acre of coverage. So, you know, if you want $40 in coverage, you know, you're going to have to spend $10-20 or somewhere in that range. So the products are out there. If you max out your multi-peril, then I would say, you know, if you max out this here, you're up to 80%, 75-80%, and it just costs so expensive to go from 80 to 85, which it really is really expensive. Then I'd say maybe we should be more efficient use of your money. Let's go buy some hail insurance. Or we got hail insurance ready, and you're like, well, it should be nice to lock in a little bit more coverage. Then let's look at SCO. I think that would be a nice third step. But again, if you're sitting at 70% on the multi-peril or even 75, I would just as soon a guy increase this before we start buying area-based coverage. These area-based plans are meant for the I-states where your yields are the same as your neighbor's yields. Your neighbor's yields are the same as the county yields. So there's not as much variability. Around here, I mean, good Lord, there's so much variability from farm to farm, or even from this, you know, from this corner of the field to the other corner of the field. So carbon credits. This is kind of an interesting thing. It's been around for a couple of years here. Soon be sold sold off a farm near you. What is a carbon credit? Carbon credit is a permit to emit 1 ton of carbon dioxide. What's in it for the farmer? Well, these major corporations are trying to make some sort of a promise to go carbon neutral by the year 2040. Microsoft, Amazon, a lot of these are trying to make this big change. Well, they're saying, all right, I can buy these carbon credits. So if I buy a carbon credit for $40 a carbon credit or $20 a carbon credit, I can work towards being carbon neutral. And frankly, these carbon credits are cheaper than me actually, the companies actually having to change anything. So saying, all right, we could actually, instead of actually changing and becoming more green, let's just go buy these carbon credits to offset our current pollution, and then we can slap carbon neutral product on the side of our box, and the consumer's happy. But is this law? Is this what's in it for the companies? Why are the companies doing this? Well, it's not the law. It's voluntary, and it's driven by consumer demand. And I sometimes think the consumers are just a bunch of idiots, but that's what they want, so that's what they get. Again, this is kind of just got this picture off the internet. Companies, they're willing to, instead of changing themselves, they make investments in they start out kind of doing it like forestry and stuff. And they would invest money here so they could help pollution here, just to go back over here. So there are two ways of doing this. Again, this is coming down the road, whether you like it or not. I'm kind of bitter about it, but whether you like it or not, it's coming. It's going to get more and more popular. There are two ways to get to for a producer to produce or sell carbon credits. And basically it comes down to you changing. Okay, there's a new practice, two types: new practice change or historical change. If you go no-till, if you split apply your nitrogen, if you grow cover crops, if you have, again, one other area which I did a bunch of research on this here lately, if you have pasture and you want to interseed a legume or alfalfa or apply nitrogen or rotational graze, that is a way to generate carbon, or I should say put carbon into, you're not generating carbon, you're putting carbon into the ground and you are polluting less. So therefore your lack of pollution can be sold to the companies. The other way is if you made a practice change in the last 5 years. If you did one of these, changed one of these practices or implemented one of these practices in the last 5 years, you can therefore say, hey, I've already put so many units of carbon into the ground. Now I want to sell them. So those are the two ways to do that. So let's talk dollars. What does this really mean for your operation? You're looking at, if you in the situation that I was given, if you implement no-till, if you add cover crops to your farming practices, you can get about $8 to $12 an acre. Okay, so this guy from Century Valley Ag, real nice guy, real knowledgeable. He was pushing it real hard a couple years ago. They've lost a little bit of steam on it, but he says if you're going to do this for the money, you're going to be disappointed. If you're already in, I think these are actually good things. I like cover crops. I like no-till. It's not right for anybody, but I like these practices. You know, you go up into South Dakota and it's really not feasible because they need to get the moisture out of the ground, or they need to help the ground dry out, or or they just need the ground to warm up. So it's just not realistic. But again, $8 to $12 an acre. Should I wait? You know, the guy dealing with that guy, or talking with that guy from Central Valley, he said the deals now are a lot better than the deals that were out 3 years ago, and they may be better than in 3 years from now. So it's just who knows. The other thing he said is you'll see with all these new biodiesel plants opening up and different ethanol, different plants in Norfolk and Hastings, Mitchell, South Dakota, low carbon grain. If you can, you know, do the paperwork, eventually they're going to say, if you raise low carbon grain by, say, they really hit on the efficiency of the use of nitrogen. You know, instead of being 1-to-1 or 1.2 units of nitrogen to 1 bushel per acre, if you can get down to, say, 0.8 bushels of nitrogen for every bushel of corn produced, that would be considered a low carbon grain. And there's outfits like Jackson, Nebraska, where they harvest the methane, I believe, off of the landfill behind them. So they are a lot more eco-friendly instead of burning just regular fossil fuels. So they sell, I heard that they sell their ethanol to California for almost somewhere around $1 premium. So there's going to be a push for this stuff, low carbon grain. So maybe it's worth waiting to do the low carbon grain thing if a producer wants to go that route. But something to think about. If you have any other questions about it, let me know. I'm trying to move along here as fast as I can and not get too terribly winded. Margin protection. This is something that is sold in the fall. Margin protection is kind of what it sounds. It figures up nationally what your inputs are. It figures up where, you know, it comes to timber, where the price of grain is going to be based off your yields. So they're going to say, all right, well, based off the inputs, you're looking at, you know, so much margin between your inputs and revenue, expected revenue. So you can actually ensure that. It's a county-based plan, just like all these other ones. It has absolutely nothing to do with your yields. It has to do with the acres you plant and maybe your APH, but not with actually what your inputs are, what your grain sales are, or what your yields are. This is area numbers in a county-based yield. Again, it is designed for the I-states, where your yields are the same as your neighbor's yields, and both your yields are the same as the county yields. Consistency, not meant so much around here. but it is heavily subsidized, and it does look appealing. Until you realize it's going to cost you, say, 20 to 40 some dollars on corn an acre, and between 40 and 65, $70 an acre on, I'm sorry, on corn an acre. Beans are 20 to $40, and corn's say 50 to 65, $70 an acre. It's very expensive. Okay. And the biggest problem is that you would want to keep your existing multi-peril policy and buy this margin protection. The problem is it only pays the higher of the two. So if you have a loss on your crop insurance, you have a loss on margin protection, they will say, all right, well, which one's going to pay out the most? And they'll say, all right, we're going to pay this one. You're going to get a check for this one. And then this insurance policy more or less just goes away. You still pay the premium, but that loss payment you should have gotten is no longer applicable because it only pays the higher of the two indemnities. The other problem with this is that sales closing for 2022 was last fall, and you would not actually get paid on a plan like this till June of 2023. So there's a 22-month lag time. Mind you, you have to pay your premium halfway through there. So you sign up last September, you pay your premium this next September, and then you get paid if there's a loss the following June. So again, it's highly subsidized. Some of these years it probably will pay out like a slot machine, but I just as soon a guy spend their money on something that they can take to the banker and say, hey, you know, I have insurance. If I don't raise a crop, I will get paid, instead of, you know, gambling on how the county is going to yield. They're spending, I mean, good Lord, $60 an acre on insurance that may fall through if you also have a crop insurance loss. We're about done here. Right to repair. This is something kind of that I think is interesting. Do you have the right to repair your tractor? This was a big deal, say out in like wheat country or even around here. It's Friday night and you have the ability to fix your, you know, you're a real tech savvy guy, or your neighbor is, or your kid is, and your tractor goes down and it's electronic. The fault is electronic. Well, do you have the right to hook up to that monitor and fix it? Well, that's kind of what they're trying to decide, because John Deere or Case IH, or all these big outfits, they say that is our software. Yeah, you own the machine, but the software is still ours, you know. Or the other situation is, you know, a lot of these Magnums or these big tractors come with auto guidance steering integrated into the system. Well, if you hack the system and unlock that, you know, because they want, say, $2,000 to $3,000 to unlock the software so that you can use the auto guidance. You know, you own the tractor, you own the software. Do you have the right to hack it? I'm not saying it's right or wrong or that you should. I'm just saying, if you know it's your tractor, do you own that software or not? So again, the bigger thing is just getting it fixed. If something goes down and, you know, and you can't get anybody to work on it, if you have the ability to fix it yourself, are you able to? That just got proposed in the University of Nebraska. Again, they've had several swings at this, and every time it's kind of stalled out. Again, if you have any questions about that, give me a shout. Input costs, just kind of depressing. You can look at nitrogen, phosphorus, potassium, urea from last year. These are just general numbers. I called the local co-op and just kind of asked them where things were last year to this year, and everything's up over 200%. Maybe phosphorus is the only thing not over 200%, but close. Chemical program, they said expected to be 30 to 40% higher across the board. You know, I think Roundup's going to be the highest. That's going to be even higher than that, but everything else, that's just the number they gave me. Seeds about the same. So I thought that was interesting. But wait till next year. I bet that'll go up. Marketing. I'm not a marketing expert, but the four things I will say is know your break evens, spread out your sales. Don't be scared to. I mean, I shouldn't say that. You have a crop insurance plan or a revenue protection plan, so that you have the flexibility of selling pre-harvest. So you can do that if you want, but if you lose sleep over at night over it, then by all means don't do it. Don't regret profitable sales and have a plan. So those would be my four things of advice, I guess. And then, of course, do not ever sell over your multi-peril crop insurance guarantee before harvest. And I like this picture because it's, you know, is this the Krusty Krab? And Patrick says, no, this is Patrick. Well, sometimes I think that's how marketing goes. And God gives you an opportunity to sell and you don't understand it. But anyways, reminders here for 2022. If you have any losses, call. If you think you might have a loss, call. Let's just get it turned in, because if you miss it, you forget to call, and all of a sudden, if we get late in the year, it can be too late, and we may not be able to get it paid, especially replants. You need to call before you destroy the crop and replant it, or you will not get paid for a replant. And then, of course, when you're driving the grain cart, remember to fold up your auger. It is amazing how strong those J&M augers are. That was not me, by the way. Summary. Prevent plant. Remove the November 1st deadline. PACE for the split of the application of nitrogen may be very beneficial for prevent plant areas. Again, if you got some low ground, maybe it's worth it in other areas as well. Government pay program, March 15th is the date to sign up. Hart County is what I recommend, unless you want to buy the supplemental coverage option. ECO, SEO may be a good option if multi-peril is already maxed out. It's the point where it's no longer cost beneficial. You get up to 80%. 85 is really expensive, so maybe we're looking doing something else. Excuse me. LRP, livestock risk protection, something worth looking into. If you've got feeder cattle, baby calves, fat cattle, I really think this is something that's going to take off here, even in our local area. The carbon credits, if you want to do it now, there's money out there to be had. $8 to $20 or $8 to $12 an acre, give or take, depending on what you want to do. But I don't know, maybe it's worth waiting around and seeing what's coming around the corner. So thank you, everybody. I sure appreciate you tuning in here. The last thing I will say is, if I can get my screen sharing snapshot. Oh, here we go. Last thing I'll say is, if we don't get a chance to meet with any of you guys or some of you guys this spring yet, we do assign apps and stuff over email or mail. If you want anything else this summer, just stay in contact. Some of you guys are harder to get a hold of than others, so more than willing to drive out to anybody's place or anything anybody needs. So just stay in contact, and we'll do whatever you need done to make you feel like you're to make sure you get the service you need. But otherwise, thanks for tuning in. I'm sure I went way over, but again, thanks again, and give a call if you have any questions. Otherwise, we'll be in touch. Thanks.